I could book a beach resort and be Cabana Tina.
Could someone bring me everything, thank you?
Good afternoon, everybody. Hopefully you all can hear me. I'm gonna let me do this. Good afternoon, everybody. Hopefully you all can hear me. It is now 4 o'clock. We're here to do a market debrief. As always, we're going to start off with the dollar index. It's the thing that kind of. Good afternoon, everybody. Oops, hold on. Hopefully you all can hear me. Let me turn that off. I know I can hear the internet. Okay, so let's start off with the dollar index. The dollar is still in longs, and what you can see is from the lows at the end of the year to the high in the middle of February, we traded a halfway back long. That halfway back long tested the 61.8% level on a daily basis. We have since rallied all the way up to our objective. That's our green line, the negative 23.6% line. What that means essentially is that unless we start going down, which we ordinarily would, we would see a series develop and we'd see the dollar come down, but it hasn't done that. What it's done is it's held up here, and it's being held up here by an extension drawn from highs to highs. That extension is trading. It has held on a couple of days, including yesterday and today, on a daily basis. And there was a little bit of strength, not a lot of strength, but a little bit of strength on the dollar. And you could say that we may be in a flag pattern here. So we'll be watching that because that dollar kind of underpins everything that we're going to be trading. We'll get into the 8-pack. I set up 8 screens here that I keep up, and I do broadcast all the time. So generally between 9 and 4 o'clock, you're going to get a chance to see these screens up here and kind of get an understanding in terms of what setups are potentially trading. So we're going to look at crude oil here. And what I want to do with crude oil is I want to actually go back from the beginning. So I'm going to go to here and I'm going to run through this. For some of you who are on the call already, it might be repeat, but for those who have joined us and are new, I want to give you the setup for crude oil and why I think it's lower and why we are heading lower. One thing to note about crude oil is that it likes to double top and double bottom. Now, what you can say here is that on an hourly basis, we definitely seem to have double topped at the 87.10 level. We hit that twice, and you'll notice the wicks there. You'll also notice the wicks here. Now, from this specific level, we actually get into the fibs. And for those that don't know, I'm a big fib guy. Fibonacci is how I've learned how to trade. It helps me stay in position. It's not always right, like everything, but it does give you an understanding in terms of where the potential trend is. And so I want to bring this fib into play here. This fib here is the fib that I use to basically kick off the short on oil. And unfortunately, we didn't get into it in the channel. And for those that are in the channel, feel free to get in touch with me if you want to get the signals. I'm offering this as free, but if you want the signals, you'd have to pay for it. Get in touch with me. It's $50 a month. Anyway, what we saw here, though, interestingly, is the sell initially on Tuesday, April 16th. And then basically we just kept selling off, and we sold down to the bottom of potentially a range. But I think this is going to be a false bottom, and you're going to see why here in a little bit. What you will notice is that we did rally all the way back up to the top of this setup actually during the Israel strike last week. So literally we went up $4 and then we traded this same setup nearly to the same pip. Traded this oil setup again for the second time. And for those that don't know me, I love second tests, because if the second test survives, you've got a really good shot of going a lot lower. And that's part of the reason why I think we're still going lower in oil. And now you're actually seeing oil sell off. And what it's doing is it's trading now the halfway back short fibs for a second time. Now I have here let me pull this 23.6 off. Now, yes, it could go higher, but the fact is that we actually had a triple top formation here underneath the 50% fib. And if you want to be more specific, what we could actually be trading is what's known as a series. And this is the series. The series actually held the 61.8% line. So, you know, you've got a couple of ways to look at it. I'm going to look at the series because that's generally how markets move. Is that they create series. And the next target for our series is 79.54. It's why this bottom here is dangerous. There are going to be people that are going to try buying this bottom when oil drops, and they are going to get smashed. And we're going to go to 79.54. So keep that in mind. Now, is there a chance for oil to rally higher? Yes, because what's happening is that we're trading fibs. Here's a fib. If you really want to zoom in, you can say that we're actually at the end of the day trading this fib from this high to this low, and we're trading it right to the 61.8% line. So my expectation is in Asia, we maybe go up and take liquidity and then drop through it, or we just start dropping. But either way, I'm set up for a drop here in crude oil and do expect this momentum that we've seen really over the last 12 hours to continue. Yes, we've also, even in this short up here, recognized that New York had to test London's low or high. And so the pre-London high in Asia and the London highs, New York ended up testing that same level. We've had 3 solid tests there of this level. I don't anticipate a move back up to 83.50, but certainly a move to 83.20 is possible if we do take some liquidity. Again, still expecting lower here on crude. Let's move to gold because we're also short gold, and our patience did pay off. I want to actually go through and kind of share with you why we're short gold up here. And it really evolves because we're trading what's known as an extension short. An extension short happens when here you are, you're expecting the market to retrace and it doesn't retrace. And so you've got to look for a pivot point, generally a low, and then you draw it to low. It's a low to low extension. And what we noticed yesterday in silver in this same debrief is that silver was trading a lows to lows extension, and that forced me to go back and look at these charts, and that's when I found that gold was trading the same lows to lows extension as well. And this lows to lows extension has actually held throughout the day, throughout the night, and into the day in Asia, in Europe, and even into New York. So what happens is that, you know, that lows to lows extension in Asia, we traded the high and we ran into resistance a couple times. We did the exact same thing in pre-London, just before it, and then London they took it lower. And of course, gold being gold did not take to it. I think that was a liquidity grab, and so they ended up running it up. They ran it up and did the same liquidity grab on the opposite side. But here's the interesting thing. They did a liquidity grab inside an extension short, and guess what? That is usually going to be a problem for bulls. People who got bullish here because there was a breakout ended up getting trapped, and now they're the ones liquidating as we go into this into the end of the day. So my expectation is that we still trade into this 2272 level at some point here in the not too distant future. The fact is, if we get below 2311, we're in pretty smooth sailing. The next support levels would be 2300, nice round level there. 2291 would be another level to be looking at. But ultimately, as I said, I really do think we're headed down into this 22.72. And so that's going to surprise a lot of people. There's a lot of bullish people um, on our forums. They're trying to buy, quote unquote, the bottom. They're potentially going to get smashed, just like the oil traders are trying to buy that bottom. Now, again, silver gives us the same way, and the reason why I use silver and gold together, you should always have those silver and gold charts on the same screen, because more often than not, it's silver that ends up determining whether or not gold actually goes through a level or not, or ends up rallying or not. So definitely keep an eye on silver. What you'll notice here is silver has the same format, same extension short, and on that extension short, we have actually traded the 50% line and the 61.8% line. I'm going to pull this. I'm going to pull this one off. Sometimes you can trade the 23.6 if it's very bearish, but what ended up happening is first test here. Second test, we ended up taking liquidity in that zone, ended up selling off. We actually took liquidity down below, and then we had a third test over in the afternoon. And remember how I was saying that we were kind of being held up by silver? Well, that was because silver decided that it wanted to do a hammer and reverse in the afternoon, and so gold actually responded and stayed up a little bit. Now that silver's selling off, you're seeing gold sell off as well. They're working in tandem, and there is more of a chance to hit some marks. Some intermediate marks right now for silver is this 27.12. I want to see this level trade because that is the lows of the morning, and I'd like to see us go through those lows. Provided we go through those lows, silver really does have a pretty straightforward move through the lows and down into this 26.38 level. That's still essentially a 90 cents or an 80 to 90 cents move. That would be massive, and that would correspond with a big decline in gold. So you've got the narrative, you've got the story, you've got the setup. I think that now we just need to watch it happen and that sort of thing. I would get careful and cautious if we end up seeing silver rally above this 27.35 level. That's why I was very careful about it this afternoon. We hit it twice and we ended up selling off from it. So that is the one caveat, is that there is always a counter trend that is probably a few ticks or pips away from getting activated in the other side. One of the key things that I like to talk through on my channel is to remind people to take their profits when they can and use break-even stops and then use take-profit stops to ensure that even a profitable trade never goes negative. Because the key element here in trading to be consistent is that you've got to be printing money, banking money, and making money, and then preserving money. The break-even stops are important. Last week, a number of us got nailed by late sells, and we were in longs at the time, that dropped $20 in the last minute or two of the session. I think that happened on Wednesday or Thursday of last week. So do keep that in mind. But when, I've got a rule, whenever I get $500 or $1,000 up, I actually start to let things go, and I'll let my profits vary by 75%, but I want to lock in those last 25% of profits. So if I'm up 1,000, I want to make 250 at a minimum on that trade. I do like to have break-even trades because they're essentially free trades in my mind, and you could just let them go. And more often than not, if you're with the trend, it turns deeply into your favor. What we've got going on, this is the silver trade, so we know that we've got silver. We also have some interesting stuff going on in stocks, and there is a reason why I did not trade stocks today, is because there's a massive earnings a calendar here, and what you're seeing is really massive volatility at the end of the day. Post earnings, we're seeing it, and yes, you could have In this trend channel, there's some possibilities. One could say that if stocks bottom here in ES, that's the S&P 500, if you can get a double bottom here, maybe that might be a way with which you can start to move back up and in this channel. But a few things to note, and I'll go through this from the very beginning, because in stocks and in the S&P, we have actually traded a series of shorts, high to low, and then if you look at where the peaks are, in many cases, we actually had peaks just above the 61.8% line. You could have sold those peaks once, twice, 3 times, 4 times, and actually went to the objective each time. Literally, you would touch the minus 23.6% objective. Here, you came close to touching it. You didn't exactly touch it, but it was close enough for government work. Same thing here. And now we actually traded 5 series in a row, and guess what? We broke the series. And when you break the series, that means you're probably going to go back up and you're going to do what's known as an all the way, halfway back short. Here's the number 6 in the series, and we broke it. And then once we broke it, what ends up happening is you're supposed to line up. You broke the series, so now you line up for longs. And they did. They actually bought the long after the series break, and then they ran it up, and that's what's been powering this move. Now the real issue will be is, are we trading? And I think that the fact is that we're variable right now because, and I'm in between. Frankly am split. Because what's happening is that we're trading the all the way halfway back short at the 38.2. But we also have a long from lows that we're close to hitting. And if we go down to the bottom of this channel, we would trade the 38.2 from lows. And we're kind of stuck in between setups. And so what you've got to work through as you're trading this is you've got to be cognizant of some of the patterns that we are. This was a pretty good short because there was a pretty good channel pattern here. Now I'm not so sure. We might be in some sort of longs, and if we can get a puke out to this level and we can bounce off of it, we've got a setup that would actually take us into this golden zone, this higher part of the channel, in this between this 50 to 61.8% that we could conceivably sell off from. I'm still technically bearish in the market, and so I am looking for sells, and I would love to be able to sell up there, but I recognize that down here, this might be a buy, and so you've got to be pretty careful about that. All that being said, these series, we made a lot of money actually over the last month selling these series. We're not going to get that set up, I don't think, for a while. We've got to work through and see if we trade this big setup here on the short side. Once you understand what's going on with the S&P 500, the rest of it kind of comes into play. And it becomes relatively easy to know what's going on with the other indices. So let's take a look at these other indices. And we've got YM here. YM had very similar setups with the series, and we actually made a mint on YM. Now, YM has been, frankly, the most, the strongest of the indices, especially over the last 3 days. So as you can see, YM traded right up into its full halfway back short even on Monday. We started getting into the 38.2. It is selling at roughly the same spot as ES. I really would love a chance to sell it up here in this box, and I'd really like a chance to sell it north of this 61.8% line. I'm not sure that's going to happen, but we'll see. Today, we actually, during the session within New York, we actually were pretty much range bound with a slight downward bias, and we'll see if that continues. I would say that, what I'd really like to see is something similar. I'd like to actually see us drop a little bit and then rally so that we could head back up into this level. We might see a bit of a drop and then that rally into it. That's kind of the ideal scenario. We'll see if that plays out. Then you've got the NASDAQ, which is admittedly somewhat of a challenge to trade. And what you're seeing right now is the NASDAQ deciding that it's going to puke out, because that's what the NASDAQ does. The NASDAQ is the most volatile of all of them. It's tech stocks. It just moves like nobody's business. And what you can see here is similar. We have the all the way halfway back short. Now, we did not have necessarily the series that the other ones had. We had that initial sell-off right here from highs. And then we had, I think we had this one. So there's two. Oh, no. I think it was this one, where we stopped at the 38.2 and we traded it. And then if you want to go from here, what ended up happening was that it became very difficult. So we ended up having to trade shorts on an extension. And so if you did this, you got one. And then we ultimately broke the extension on the second try. So us breaking the extension here, interestingly enough, we have fallen right back to that extension. This could be support here, so we've got to watch it. But as I talk, what's going to be important is, do we actually trade the long from lows? And we're now in it. And this is why I've been back and forth with these equities, is that we have a all the way halfway back short that we're trading, but we're also now starting to trade, at least in the NASDAQ, because of earnings. We're now starting to trade this long. I'm going to be looking for longs and looking for some sort of bottoming action here that could propel us to the top and actually take us into this bigger fib. And one of the things that you will notice on this NASDAQ is you might be able to start to notice that there is hopefully some sort of expanding wedge taking place here. And we'll see if there is, well, maybe not. Maybe it's just a channel. We'll see if this channel holds. In many cases, you'll get a bounce maybe down here, and then we get a rally up. So that's kind of what I'm going to be looking for tonight and into London. But you could definitely say that, you don't want to be long this thing yet. There is no bottoming pattern here. But, certainly if you can start to see a triple bottom, a head and shoulders bottom, or a hammer candle, or something like that in this bull fib, that would be a really good long to set you up and ideally take it into this short going forward. And yes, I'm still short. I want to be short longer term. It's just that we know that in these 15-minute candles and at this bottom, it's hard to be short. A whole bunch of people were short down here and they got hammered. And what actually brought us up here is simply a halfway back long from lows. As you can see, this halfway back long from lows traded on Monday and then kind of held over through Asia into Europe. It was a struggle because literally it didn't move for 12 hours. And then it started to take off. And then once it took off, it just kept going. Eventually, we had earnings yesterday. We got big time overbought. And what you're seeing is the is the retrace from that overbought level. We had to break into highs earlier in the day to get a bunch of people trapped up here to basically cause this flush that's going to, frankly, probably keep flushing. And then we'll be looking for some support here. Maybe this level, this 50% halfway back, actually is support or down here. The problem is that the NASDAQ tends to go everywhere. And I would not be surprised to see the NASDAQ trade the 61.8 or blow through it even and trade even lower fibs before it rallies. The NASDAQ is a dangerous, dangerous beast. So keep that in mind. Don't get into it just because you see a fib. It's taken me years to figure that stuff out. just because you see a fib doesn't mean it's going to actually trade it. You've got to prove it, and you've got to end up proving it multiple times, 3, 4, 5 times, and you're gonna. And then after that, when you start to see some movement up, you could say yes, that's the support level, and that's where I want to be. And then that's the Nasdaq, Bitcoin. And I always have the Bitcoin up here. What's happening is that Bitcoin since January has been trading what's known as an extension long. The extension long has traded once on a daily time frame here in March. You'll notice that there was a lot of strength. We didn't even trade the 50% line or the 61.8% line in March. This is test number 1. Then we've been basically chopping and range bound in between. We've just traded here in April a second test, and I consider all these days a test. We only had one day where we traded below the 50% line, and then we went right up and we just started moving to it. What's happening is that there is a group of traders that believe that the short is going to take place, and they're trading the short. Not necessarily a bad thing. All that being said, I still like the long here because the long is the principal trade here and the long extension, but these extensions do break. Now I'll give you some rationale for this. Short. Those traders think that the Nasdaq has peaked and that with tech stocks going down, Bitcoin should go down. And so that's why they're being very active in terms of selling this Bitcoin. And as a matter of fact, you can say Bitcoin essentially has gone down in the last 8 hours. So people are trying to sell Bitcoin. This is not a great sell, and I'll tell you why. If NASDAQ gets a bid, this is all going to fade away, and we're going to go back up and we're going to retest it anyways. And the reason is because we retest key levels at least 2 times, if not 3 or 4 or 5 times. And so what will happen here is that on Bitcoin, people are going to buy, if they see the NASDAQ going up, they're going to buy the counter trend long. And we're close to we're about to trade the counter trend long, or the trend long versus the counter trend short. And that's why this action is doing what it's doing. So be careful there.
Yes. Do you think
it's a tough one? If ideally you are long at the bottom of the range or you're short at the highs. I'm not exactly saying that you should be short at the highs, but some people obviously did, and that's okay. In a range, it's okay to be short at the tops and long at the bottom. You just have to understand that at some point, if we end up trading this short, or we end up trading this long and we go through this short, everything up here is in jeopardy because we will have taken out a short from highs. We will also have a long from the extension long and a potential long from this low pivot. That between those 2 longs, that's enough power to take us through and get us up to this 79,670 level. So yeah, 80,000 is possible. We did look at copper, and copper was trading a series of shorts. It broke those shorts last night. I don't know if I want to. Yeah, I think I may be able to show you. Let's see if I can do that. All right. Hopefully you guys can see this. The question is, do I think we can plan for a 62,500 buy in Bitcoin? That's a good question. I don't think so. And I'll tell you the reason why is that a 62,500 buy means that we're going to go back down and test it a 3rd time. That's a tough one. Yeah, I guess anything is possible inside a range. And so legitimately, if this sell continues on, you could. But I would actually be looking. You can already start to see, if you look closely enough on this daily chart, we might have actually just traded this 50% line here early, just now. It's at 63,541. So you're gonna have to be careful about that. I would say that it's everything's in a zone. So maybe you could trade 62.5 if we do get to this 61.8% line. Yeah, I guess that's possible. Getting much further below it, I don't think so, unless the Nasdaq really pukes out. If the Nasdaq pukes out, then you've got a chance. Let me show actually copper, because this trade went against us, so you guys should be able to see it. And on the stream, I think that they're getting it too on YouTube. By the way, if you're on YouTube, I'd appreciate if you hit the subscribe button, hit the like button. That would help out. Those who are here on Discord, if you're a guest of mine, get in touch with me. I can get you a trial to our Signals group and that sort of thing. If you're on YouTube and you want to get on the Signals group, get in touch with me by a message over there. Anyways, what we saw yesterday, interestingly enough, or on Monday, we actually did hit a 2-year high in copper. And then we started selling off. And we kept selling off because we kept hitting these 61.8% lines and then selling off. And we sold off once, twice. There was a third time that we looked like that we were trading. And then what ended up happening is last night in Asia, I got short, and I got short at, I thought, a good level here, and then I got blown out. And it happens because what ended up happening is that once we blew through the series, we ended up trading the halfway back short. And so now we're technically trading the halfway back short, and I have not called this, partly because I think that there might be some better trades in gold and silver. And this one's relatively strong. But here's what is happening is that we did trade the halfway back short. And in platinum at the 61.8% line. Now, we dipped in, but we didn't. One thing that you'll notice is we didn't really close above it. So this was actually this morning, and we sold off. So that short is still valid, crazy enough. I just shorted it too damn early, and that's my fault. It happens. So, all the way halfway back short on copper is trading, and you could say that, as long as we stay under 44.4880, we've got some big targets to the downside in terms of 434.70. I mean, these are massive movements in a contract. You're talking about $10,000 potentially of movement here. So that's why if you do trade copper, trade it small. Definitely have your risk on. You want to be careful trading in the middle of this range now, because honestly, we could go back up and we could test the top of this range again. And we could do that just because these ranges will trade time after time. One of the criticisms I had on on our channel is that I put levels out there, and in many cases, I'm going to tell everybody, trade the level, put your stop on, and then watch it. If it starts moving your way, I want you to once it moves big enough, I need you to go to break even and then start to trail it. And the reason why I do that is because I want you to preserve capital. Because ultimately, look at what happened up here. We traded the 61.8% line it looks like in London, and then we sold off in pre-London, and we sold off decently. That's a good size move. And then we rallied right back up to take that 61.8% line again. And so, all these things happen in ranges. Sometimes they move fast, like, we had some big movements there. Other times it's going to be sell the level once, sell the level again, keep selling it, and take profit each time it comes down. Eventually, it should quote unquote break if we're trading with the trend, and that's what we're going to be looking for in platinum, or not in platinum, but in copper. I think that the key element here is that recognize that the metals do seem to be in a bit of a downtrend, and that's part of the reason why gold and silver are also selling off too, is that we're seeing sell-offs in a lot of the key areas. There's other ways with which I could look at the market, and next time I may show you my daily setups. But yeah, actually I could probably do it now. I can show you this. On the daily chart here in copper, we're trading at relative highs in the Bollinger Band. And so with these highs in the Bollinger Band, it's tough. You really don't want to be outside of the Bollinger Band. That's usually where professionals start to get rid of their positions, and you can start to see the market sell off. What is cool is that in copper, you had a fantastic support level at the midpoint of the Bollinger Band earlier last month, and man, if you would have bought those daily levels, that would have turned into a hell of a trade, because look at how far you've gone up. What I do suspect we're going to see is, now that we are trading a little bit lower, there's a good chance that we do try to make our way towards these Bollinger Bands on daily time frames in all of these markets. And for gold, that actually means gold has a Bollinger Band that's way down here. Let me see if I can bring that up. Interestingly enough, we are trading the Bollinger Band right now. So we've actually moved. You can see how gold has actually, copper's outperformed everybody else because copper's still way above its midpoint of the Bollinger Band. Gold is not. So gold has come off, and it really didn't take long to get to the Bollinger Band. What happens here is that you have to actually use this midpoint of the Bollinger Band as support. If you miss it, and if you go through it, there's a chance that you trade to the bottom of the Bollinger Band, which in this case is 22.21. So there's $90 potential move just on this indicators chart. And what you're also seeing is that we lost the embedded nature of the slow stochastics, and that has also precipitated this move down. So there is a chance for deeper pullbacks here, and frankly that's probably where we should go. There is this potential extension here I want to bring up, because this is part of the thing. This is one of the reasons why gold is trying to hold here, is that this daily extension actually traded right to the pip at the 22.90 level on Tuesday, yesterday. So, does this extension hold? I'm somewhat doubtful, but you do have to respect it, and that's the reason why we can be a little bit cautious about this, but we're still going to trade the intradays, because it's the intradays that move the dailies. At least it has over the recent few weeks, because we've ended up going up, and yes, the dailies have shown that they were overextended, but what ended up happening is we had intraday Fibonacci's that setups that kept us moving higher. We could have intraday Fibonacci setups that keep us moving lower. So just because this looks like a potential bottom here doesn't mean to say that it is. Now, what I would be interested about is what happens if we go and trade 22.90, this 22.97 level, 22.90 level. If we trade this 22.90 level again and we hold it, then I would be very interested in the long, because that way we would actually have a long setup that could take us to 24.96, and we would have a daily long setup. But until that 22.90 level holds, I've got to respect our intraday fibs, and that's the reason why we're short. Hope this is all good. Here's another question. what period times for your EMAs? My EMA, actually, let me share that with you. My period times are essentially the 12, 22, and 55. I got that from a guy off the internet that I actually happen to like off of YouTube. He's a pretty good guy, and he just says he likes those, and it turns out that it works for me. I use this on all time frames, so it does help kind of frame a good discussion. And what you can see here is that we're potentially consolidating around this level with still a trend lower, and that's to be expected because, frankly, there isn't any reason why we could not go back and revisit the 55 day moving average on the EMA for gold, and that, frankly, is probably, if we did that, that's probably a halfway back long. Yeah, pretty well. It's going to be a 38.2%. Looks like. But that's what I would. That's how I use those EMAs. When you trade gold, what other assets do you put in your chart? Some people put. Yeah, I don't. I look at DXY on its own, and that kind of sets the stage. The fact is, I can look at DXY on a daily basis and get an understanding. I know that for DXY, as long as it stays above this extension level, and it goes up, then that means that, frankly, gold has a good chance of going down because higher dollar is generally a headwind. And that's kind of how I use it. Yes, you could get very specific and try to time it, and there is pretty high correlation. I think it's like a negative 90% or negative 0.9 correlation, but there is that 0.1% of the time that it's going to actually be strong with a stronger dollar or be weak with a weaker dollar, and so it's not always 1-to-1 or inverse, but there is that relationship there. So again, if this is a flag and this looks like a flag and we get some higher moves out of the dollar here and it starts to move up, you could actually say that gold is going to probably keep moving down, and so that's why we're bearish there. Any other questions, comments, or concerns? Let me check anybody. Why NAS suddenly went down there? That was because of earnings and also just because it's the NAS. NASDAQ will respond quickly to earnings, and so that's what you're seeing. I'm sure that we actually have in our discussion forums, in our paid service, there was somebody who got an earnings calendar for the week. It's chock full of NASDAQ names, and so my guess is that unlike yesterday where you had Elon basically creating a scam and touting robo-taxis even though Tesla's earnings and KPIs were horrible. I mean, Tesla sold less cars and they made more cars than they've ever built, and their earnings are below that of General Motors. So tell me why Tesla deserves a valuation that's 2 to 3 times higher than GM and higher than Toyota and higher than all these legacy automakers. I have no idea. But that's just my views on Tesla. I ultimately think Tesla is a sell, but you're going to have to be careful here. One of these days we'll get into the equities. But I think now what you're seeing some additional earnings come out. But the fact is, the NASDAQ was on a sell anyways, and so if there were any bad earnings, it just accentuated it, and it's creating a new potential channel down here, and we'll see how far this actually goes. Cool. Again, thanks for joining us. If you're on the YouTube, would appreciate us. Hit the subscribe button, hit the like button. Thanks for your support there. I'll try doing this 9:15 in the morning and 4 o'clock every evening. If you want to sign up or learn more about the paid channel, just get in touch with me at some point here. I'm all over the place. Talk to you guys soon. It was great, and we'll talk to you soon. Bye.